Hi everyone, welcome to this live event. As usual, I will review the market with you and see what we can expect for the rest of the week. Okay, so let's start with the macroeconomic calendar. I will share the calendar with you. You know, we have had some minor releases so far this week, but I don't see nothing being actually relevant. I do believe that attention is now focusing in the upcoming GDP reading in the US. This is not maybe the most relevant one because we had an advanced one last week. This is the second revision of those figures that are actually expected and change, as you can see, but slightly higher from 1.9 to 2.1. Prices to remain the same. So market doesn't pay a lot of attention unless we have a huge deviation from what is expected. And we will have the final revision of this figure next month by the end of next month. So there we go. Then that could be a bit more relevant than this particular one. There's plenty of data coming from the US today, but and I believe that most important will be consumer confidence because, well, it's expected slightly lower, but it has been pretty erratic lately due to the fact that market is unclear of what to think about the dollar with the new administration and the policies or firm news about what Mr. Trump wants to do. He promises a lot about taxes, about investment, about Obamacare and health uh, funds, but so far it has been just promises, right? And by the way, he will address the Congress, the joint session of the Congress. Hi, hello. Sorry for the interruption. I had a problem with internet. I'm back online. Sorry for that. Okay, sorry. Really sorry. Uh, it's terrible to have lousy connection sometimes. Oh, here I am. Okay, sorry. I'm sharing back my calendar. As I was saying today, Donald Trump will testify before Congress, a joint session, right? And he will be discussing the federal budget and infrastructure investment. And there's comments about he will discuss also an increase in the defense budget, right? Um, but beyond that, we are not expecting much more than that. Anyway, the market is quite anxious about whatever Trump has to say. And it's true, it has been just 5 weeks at the office. So they are given the chances until he complete the first 100 days. But at the same time, the market is a bit hesitant about his ability to produce or deliver all of his promises. I believe that yesterday he said something like modifying the care system. It's more complicated than he thought, right? So, of course, it's not easy to rule a country, and well, this seems to be discovering so. So, anyway, I do believe the market will probably today stand in wait and see mode unless we have really strong deviations in the macroeconomic figures, right? And wait for whatever Trump will say and do and offer later in the late US afternoon, okay? On Wednesday, I do believe that we are going to get some action here in Asia because not only we are going to have GDP figures from Australia, we are also having the PMIs from China. Market is expecting a slightly worse than previous figures. But overall, we're expecting China to say, yeah, we are still growing. Yeah, things are okay. So don't worry too much, right? I'm not sure if that's going to be the case or that's going to get, but if it does, the OC may probably get a boost, right? And also, we will have some confidence, okay, across the board. And therefore, we are probably see stocks continue running and the OC also by commodity related currencies, sorry, find and support. Um, Later on the day, there's some manufacturing preliminary PMIs for February for the euro area. I don't believe the market will pay much attention to the unemployment figures. Attention will probably focus in manufacturing in Germany and the euro area as a whole for most, you know, macroeconomic data coming from the euro area ever since last December has been showing steady growth in the region. So, uh, in general, that's positive for the euro. Although we are not seeing that in price action because political uncertainty about upcoming elections in France, Germany, Dutch, and even a probable referendum in Italy are limiting the possibility of an euro rally, right? And I believe that there are little chances that the euro can run because of this political woes, unless until we have the first elections, which, if I'm not wrong, are in April. Okay, even despite we see a weaker dollar, the euro upside seems quite limited. Okay, inflation in Germany also will take some attention, but I don't expect it to move much the euro. I believe the market will probably focus on personal income and expenditure figures in the US. Higher spending, higher income is what the market is looking for to confirm a March rate hike in the US, right? And of course, the PMIs from the US also. Bank of Canada will announce rates. This affect mostly Canadian dollar. Not changes are expected, but whatever Plus has to say will probably affect the pair, right? Hawkish, it's a bullish cat, right? Dovish is bearish cat, right? Not much more than that in the way for Canadian dollar. Anyway, on Thursdays, there are a lot of minor readings, and I don't expect any of this to be really relevant for the market. Inflation in the euro area could be a market mover if we have really strong upticks in numbers, because inflation has been rising ever since December, but the ECB has dismissed those advances in inflation as temporal and due to energy prices. But if the numbers are beginning to be more steady with the continued inflation rises, December, January, February, March, then that will mean something and probably help the euro against this political chaos case I presented, right? Anyway, uh, well, uh, inflation in Japan, sorry, is not like it's going to move much in the market either. This market does tends to not to believe in whatever Japan releases because they have been faking numbers for so many years in the past that these days are considered a little relevant, right? And on Friday, I believe that we are going to have again some action because of services PMIs and retail sales in the Eurozone and a lot of Fed speakers in the US. I believe that this will close the week with a high note, particularly if we had also Yana, yeah, speaking on Friday, if they present a hawkish stance regarding the March rate hike. Okay. Anyway, I will turn to my charts. Yeah, that will be much more interesting. Give me a second. Things are slow in here. Okay, here we are. Let's start reviewing the euro. Okay, I have brought this daily descendant trend line from February high, which is also this year high, right? The pair has been trying to break above it and actually extended beyond it yesterday, but still too attached to the level. And what I'm also finding a bit quite relevant is the fact that the price is unable to advance beyond 630, which is last week high, right? 632 was last week, 630 was this one. Take a look at the daily. We're struggling below sharply bearish 20 and 100 moving average. And while technical indicators have recovered within bearish territory, the fact is that we are not seeing much of an upward potential in price, right? Not much of a response in price. So actually, what I'm thinking at this point is that the euro really needs to clear this 630 region to be able to advance further, right? We have a minor resistance around 660, but the most relevant one continues to be the 700, 720 price zone, where it has stalled plenty of times during the past few weeks, either its way down or its way up, right? It stands for the 38.2% retracement of the post US election decline, right? Take a look at 4 hour charts. Things are not looking good towards the upside. There's no upward momentum. The 1 and 200 moving average are capping the upside, although I don't see much of downward potential unless we lost again this 560 region, the next favor support. Below that, 520 is for me the main support. The price stalled multiple times around that level. And if it does give up, I do expect a fall beyond this 493 we post last week and probably towards 440, 470. That price zone is the next probable target. I don't know, maybe if Trump is able to trigger enough enthusiasm today and offer something more than words, the market could believe him. But I have little hopes that would happen, okay? Anyway, for the pound dollar, the fact is that there's nothing to add to what we have been discussing lately. The pair has been range bound pretty much for all this February, right? Contained by selling interest on spikes beyond 25.40, but find support about 53.50. So we have a 200 pips range most that where the pair has been holding on for most of this month, right? There's this increasing bearish potential coming in here due to the fact that we had headlines pointing for a probable Scottish independence referendum, right? You know, Scotland wants to remain within the European market. Scotland doesn't like to move away from the single market, which is what Theresa May said she will do, sorry, uh, when they left the euro area. So it's a pretty complex situation. We already had a Scottish independence referendum, and the stay won by a little margin last year, not the previous one. But things are different now that they are leaving the euro area. There was a lot of comments coming from the secretary of the minister, but there have been no official releases on the matter, no official comments neither from Prime Minister May, neither from Scottish Prime Minister and Colin Sturgeon. So unless we have some actual wording coming from them, I wouldn't be expecting much about that waiting on the pound. Okay, but still the risk has turned indeed towards the downside in here, right? Anyway, regarding the levels, for the past 3 weeks, the pair has sound its decline around 23.80, 2083, 85, 82. So below that level, the next probable bearish target or support is 23.45, which is the 50% retracement of the May triggered rally early January, right? And also this February low, okay? So that's for me the key. The pair will probably gain bearish strength only on a break below that level. And I do expect it to come to this region 22.40, 22.60, right, as the next bearish target, okay? And as I said, 25.40, this area is the key because spikes above the level have been quite quickly reversed. Yeah, we have a 40, 24.80, sorry, as the first short-term resistance from here, but 25. But honestly, I still see a lot of selling interest waiting in these levels, and therefore I don't see how the market will dare to push the price beyond the level at this point. Uh, mm, Maybe, right? You know that the Brexit bill, it's going through the Congress to the House of Lords. Sorry, these days. So maybe if we have some news coming from there, we may see the pair reacting or the pound gaining momentum on somehow positive news in that front. But actually, I'm not seeing them coming, right? Anyway, it's a possibility, and I have to mention it, right? Let's move to the dollar Japanese yen. Sorry for that. There we are. Uh, as you can see, uh, guys, I have been saying that this pair is bearish, and I don't see how. I would change to daily chart. I don't see how we can argue against that because of what we see in the daily chart. Although, yeah, we need to break below the lows around 11.16 to confirm such move, right? The political woes, the uncertainty in Europe, the uncertainty coming from the US, all of fueling demand for safe haven assets. We have also gold at nearly 4-month highs. So there we are, not seeing much of an upward potential in this particular pair. Gains are seen as selling opportunities, and despite it has broken below its 100 simple moving average, the moving average maintains bullish slope so far. So not yet, not enough to confirm a downward continuation. Round the pair bottom around 1160 early February. So that's the level I'm looking for breakout to see further declines to 110, right? Which is the 50% retracement of the post US election run. But I don't see how a rally can be sustained. Of course, everything can happen in the forex market. But what I'm looking for here is a clear break of 1190 and a quick run towards 1160, and below that level, a downward extension. Okay. Um, the upside, I do believe that the main resistance we were looking right now, the level to watch is this 1320 region, right, where we have 100 simple moving average in the daily chart. As the market will watching for a break above the level to attempt to push the pair higher. Okay. Anyway, I was watching also this area 1440, 1450 as the next and most relevant resistance. I do believe that the pair needs to close a week above this level to continue advancing, right? And change the negative tone we are seeing ever since the year started. Okay, that's the level I will be looking for to think or start thinking of a probably outward extension in here. Okay, when it comes to the Aussie, again, a pair that has nothing or little to offer. It has been trading steadily above the 76 level pretty much for most of this February, and the 77 level has been unbreakable because spikes above that level were quickly reverted. I will go back to my weekly chart and draw a line around 77. Okay, there we are. Okay, sort of there. And as you can see, the pair has been unable to close the week above it since mid 2015, right? We had some attempts, some spikes above that level, but none has been enough to push the pair higher. Also, we need some. I'm inclined to wait for a bearish breakout, but that's not happening either. We are seeing the pair pretty much comfortable and buyers surging around 76. So quite neutral on the OC these days. Um, what can I say? I wouldn't like to buy the pair. To be honest, I'm not willing to buy it, despite uh, the downside. It seems well contained for now. Okay, that's what I'm thinking. And about gold, as that said, we are trading at almost 4 months highs. We are at level last seen in early November. The commodity has corrected up to the 61.8% retracement of the US elections decline. It has been struggling around this level, right? Take a look for most of the past week and this one. Sorry, for most of the ends of past week and this one, not able to break higher. When I'm watching the daily chart, is that the 200 simple moving average, right? It's some break holding the upside for now, right? But we're still too close to it and still too close to the FIBO to talk about, okay, we can confirm a top in here and start thinking that the, the commodity will fall. I can't see that happening yet. Okay, I go like, I don't know, maybe a break below 20 simple moving average, and even greater if we lost 1230 to talk about bearish continuation in the year. Okay, anyway, if this high gives up on 1263.80 and we can go above that, then I would be looking for a 100% extension up to a year in gold prices. Okay, but for the most, I do expect some consolidation until we get some clear definitions coming from the Fed or from our friend Mr. Trump, right? But that's what the market is waiting for. Anyway, keep in mind that the risk averse and bear environment is favoring gold. So actually, unless the Fed puts the trigger in March, the comments and rumors about a rate hike are not going to have the same effect that they had over the past year, right? If hopes of a rate hike are not enough these days to push gold lower, right? And when it comes to oil, little going on in here. Also, it has find a comfort zone, and there we are, right? Honestly, not seeing much of a directional potential in here. As you can see, we will remain trading in within 50, 55, right? Attempts to regain the upside are being quickly reversed. It's trapped between a rock and a hard place because, as you know, uh, the OPEC and many non-OPEC countries had agreed to cut production to boost prices, and that's what moved prices from around 44 to the high around 55, right? But after that happened, not only the price wasn't able to keep on rising, but U.S. production has been increasing. U.S. stockpiles have also been increasing, right? And all of that is somehow telling us that maybe those cuts that the OPEC is offering are not enough to take the glut down, and therefore neither enough to put the prices beyond that 55 top. Okay. So anyway, what I'm trying to say here is that we are still lacking clear direction, and the play in the range is the name of the game. Keep on playing that range, and you will be winning some sense. Okay, within those moves. Not seeing much more on the commodity these days. In fact, I do believe that the risk will turn towards downside, but that's just speculative from me because I believe that at some point, bidding US production will offset oil cuts from OPEC, production cuts from OPEC. It's my view, it's my personal view, as the OPEC has plan to keep on reducing their output until June. So unless they extend that, and I don't see much of a chances that things can change in this uh, market. Okay. Anyway, sorry for the early cat, and that's it for today. Thank you for being here with me. See you back soon. Okay, and have a great trading week. Thank you and goodbye.